Thank you for joining us for Small Talks for Big Change, where we simplify financial topics to help with your financial wellness. Welcome back, everybody. My name is Andrew Farrell. I am Patelco's financial well-being educator. And today's episode, we are going to be doing just what that tagline says, which is simplifying a financial topic that is very prevalent in everyone's life. But I think a lot of people still have a lot of questions about a lot of things they don't quite understand about it. We just recently did a webinar on Wednesday, July 8th, which went over all of the new credit updates that are happening these days. We talked a lot about trended data, alternative data, the new scoring models, all that good stuff, and how credit has evolved over the years. But I want to talk about credit from a very baseline place because I feel like a lot of people have questions about what credit even is, how their scores are calculated, what to do if they make credit mistakes in their lives. So joining us, we have Erika Karamanos. She is an enterprise certified financial specialist with Patelco Credit Union. Erika, welcome to Small Talks for Big Change.
Thank you, Andrew. How are you?
I'm doing really good. How are you doing today?
I'm great.
Good.
A little chilly this morning, but it's okay.
It is. We're pushing through. So Erika has been with Patelco for just under 8 years. I know you started in our Campbell branch, and now, like I said, you are an ECFS, an Enterprise Certified Financial Specialist. We've had, I believe now, the set, all 3 ECFSs on the podcast. And basically, for anybody who is unfamiliar, an ECFS is just a comprehensive kind of financial counselor. So Erika, if you could talk a little bit about your time with Patelco, what you do as an ECFS, what brought you to Patelco and in this line of work, and just introduce yourself a little bit.
Absolutely. So I joined in December of 2018. I left a big bank, and the HR recruiter had wooed me for like 6 months because I was not ready to make that jump from big bank to a credit union.
Sure.
Even though I've been to the credit union my entire life.
Yeah.
That's the crazy part of it. But I did my interview on Halloween.
Oh, wow.
And I don't know if you've ever been at a branch on Halloween. The executive leadership team came in full costume. And I was like, oh no, this is the place to be. They like Halloween. They like having fun.
Was the person interviewing you also in a Halloween costume?
Yes, he was great. And I was like, I'm under trust.
Yeah. For people who do not know, Patelco takes Halloween very, very seriously. Yes.
But as far as like my background, banking is an accident. I got my degree in psychology. And when I graduated high school and going into college, that's when the housing market crisis happened.
Yeah.
So I was bouncing around retail jobs, landed in banking, and then came to Patelco. And I think it's been the best decision I've made so far.
I love to hear that.
And as far as my role, I don't use my formal title. I just call myself a financial coach to make it easier.
Yeah.
I'm here to help you guys budget, save money, pay off debt, build credit, rebuild credit, and then monitor credit. But I don't think of them as individual things. I think of them as a
holistic view. Yep.
Exactly.
Yeah.
So like whenever I meet people, my first question is, I want to get to know you. What's going on in your life? What is the instance on why you're meeting me?
Sure.
And I have my own method of coaching because I want you to get through specific skills.
Yeah.
That's the most important thing. And then everything else is going to come down to consistency.
Yeah.
A little bit of knowledge here and there.
That's beautiful. I think that your psychology degree probably does come in handy quite a bit for that because, I know with, we were talking about this on the last episode, but the psychology behind just how people spend and how people borrow, it's very, very deep rooted in people's relationships with money. So I think that having that human element to what you do is probably why you are perfect for the role that you're in.
Honestly, I think that's what's probably set me apart from like some of my peers that started this program.
Yeah, I appreciate how you said that your angle that you take on this is very kind of one-on-one and of a human or psychological nature, because I think that credit does feel very difficult for a lot of people, and sometimes there is a lack of empathy with people who are struggling with budgeting, credit, money in any capacity. I have a couple stats I want to share. The NerdWallet had a 2025 report which shows that 49% of Americans believe that credit card debt is just a normal part of life, which We'll get into this later, but spoiler alert, it is not. You do not have to have credit card debt.
Yeah.
And there's also Bankrate posted their 2026 credit card debt report. And this states that 1 in 5 people feel like they will never pay off their credit card debt. And more than half of those people do not have any sort of payoff plan. So I think that a lot of people just sort of accept that I'm going to be in debt, credit's going to happen, my credit might tank, and this is just a part of life. And it doesn't, I think, always need to be that way. So if you can, from your point of view and what you do as an ECFS, break down why credit feels stressful for a lot of people and dive into some of the things that might impact credit behavior.
Well, I think it comes down to a few things. One, there is a knowledge gap. You have people who do or don't know, and then you have everyone in between that might have picked up information.
Right.
I mean, you've even said so earlier. Credit's always changing, so unless you're keeping up with people who know what they're talking about, you can get left behind.
For sure.
2, I'm going to say what you had said earlier. There's a lot of big feelings tied in money, and if you're avoidant, I can see you just ostrich, head in the sand. I don't want to see it. I can't hear it. It's not there.
Yeah.
It really comes down to a little bit of consistency, a little bit of knowledge, and having someone you need to be a sounding board. Because if there's one thing I really like to articulate with clients and just everyone, I'm not Dave Ramsey. I'm not Caleb, whatever his name is.
Right.
I'm not going to yell at you. I'm not into that. I'm a millennial. All I got when I got out of college was, oh my God, you're running the academy. You're avocado toast. You're iced coffee. And I was like,
Yep. I'm right there with you.
Even if I spent money every single day at Starbucks, if I had a line in my budget and I was okay with spending it, that's my money.
Yeah.
That's all that matters. The difference now, if I'm bringing it back to credit, if I'm using a credit card, am I paying off that credit card every month?
Yeah.
Am I being habitual? Am I being intentional about my spending? Those are little things like that. And as far as credit card debt, you don't have to be in credit card debt forever.
No.
If you're going to take on debt, you need a plan. And more importantly, the easiest way is your credit card limit is not your spending power.
No.
If you can break up with that immediately, you will stay out of the red zone of having a maxed out card.
Yeah. And I think that is a very crucial point that is not discussed enough. And it's because, a lot of the banks obviously want to make a profit, but having a credit card limit that has a $15,000 limit does not mean that you should just be spending $15,000. And these are things that I think for us, because we work in this financial space and we see these kinds of things every day, is very second nature. But if you are not someone like, I wouldn't know this myself if I didn't work in finance and have this be my day-to-day life. So I think that knowledge gap that you talked about is very, very crucial for this. And also the empathy behind it. You mentioned earlier, having someone that you can work with and spitball ideas off of and create a plan with. It's something that we talk about a lot on this podcast in particular, but not being afraid to ask for help, I think is a crucial point for getting yourself out of this feeling of this is just the way that life has to be, because it's not.
True. And I'll say this is the one thing that I really love about Patelco. You will always find somebody that's willing to help you. I remember being in college and this institution had a non-sufficient fund fee of like $36. And then every day your account was negative, was negative $5.
Ooh.
Oh, yeah. It was a pile on.
Yeah.
And this is pre-Obama. You can't have more than so many non-sufficient fund fees in a single day.
Right.
They just pile on. And you would get people who just talk down to you. And I knew in that moment, if I ever crossed and was on the other side of the desk, I was never going to treat people like that.
Yeah.
And I kind of just carried that through. So, like, I tell people, hey, let's just look at it. Let's see, where did the mistake happen? How do I come back and how do I fix that problem?
Yeah.
How do we prevent that problem? And again, you look at like terms. Do people know the difference between available balance and balance?
And
There, again, perfect little knowledge gap. I had to tell somebody like in the last 3 weeks about that. They're like, oh, I didn't know that. I'm like, yeah, no, your balance is just whatever your account started at the day. Look at whatever's available. That's your magic number. That's your guiding point. They're like, oh, okay, cool. And I was like, cool.
Yeah. I want to punctuate what you said on that, because this is something that I think is overlooked a lot. I think that a lot of people sometimes are hesitant to reach out for help because they are afraid of being judged or scolded or whatever you just mentioned. And I can just say, I've been with Patelco for 9 years. I've worked at many branches. I was in Sacramento. I worked in all those. I've been all around the East Bay and the SF region. I have never seen a Patelco employee who would treat a member with anything less than compassion and understanding and empathy, which I think is also something that I really value about Patelco.
Oh, no, I absolutely do. And I think there are like 3 major instances that I can say about that. COVID.
Yeah.
We all kept our jobs.
Yes.
We made sure that we took care of our people. And more importantly, I think this is a bigger thing, is we have an entire department that if you are struggling, Account Solutions, talk to them.
Yeah.
I know that sounds scary, but I, in coaching, have helped people get on plans. I mean, you're talking to that department, but they're here to help you, and we are just that stepping stone to get you there.
1000%. So I would like to circle back to the credit conversation here. And I want to talk about another study that I read, which is the Consumer Financial Protection Bureau study. The CFPB did a Consumer Voices on Credit Reports and Scores report. That's a mouthful. And that reports that there are several consumers out there, I think it was 60%, who are confused about what credit reports and credit scores even are. So this may seem very base level, very center of the onion, but I do want to talk a little bit about this because, like we're saying, people can be very confused about what a credit report, credit score is, what the differences are. And I think when you have those confusions, you sometimes feel intimidated to even ask for help because you don't want to be perceived as someone who doesn't know what's going on. So Erika, if you can just broad strokes explain, what is credit?
So credit is the ability for you to borrow money and then pay it back. The number, the score, is how good you are. And I don't want to moralize, but
I know what you mean.
I want everyone to hear what I'm saying. It's what's your ability of paying them?
Yeah,
That's a better
it's like
word.
Your grade.
Yeah, exactly. Grade. That's a good one. And then the credit report, it's a compilation of everything you've done in your history, which gets you that score. And then I'm going to take it a step further, and I'm going to introduce scoring models. This is how you get your grade.
Yeah.
FICO and Vantage tell you what factors impact your score.
Yeah.
So if you walk that all the way backwards, I get a score based on the behaviors I'm doing. And if the behaviors are fiscally responsible, we'll say I'll have a higher score.
Sure.
If it's somewhere in between, or let's say some chaos has happened in my life, my score is going to dip. But the beautiful thing about credit is it gets a reset every 7 years.
It's resilient, yeah.
I love that because for somebody who lost a job and went from a 725 to a 350 in 7 months because of no income, I had a countdown of the date where I knew all of it was going to fall off. And I purposely waited to start reapplying for credit because I was like, hey, look at that. It's
Let's
gone.
just wait it out. Yes, exactly.
So that is the beauty and the basic of it. Just know the score gives you an approximation, and that's what's going to cost you for later on.
Yeah. The score is like your prediction of what the lender sees as your viability as someone to lend money to. It also determines your interest rates.
Correct.
So the score is the grade for based on what your history is. Can you talk a little bit about what actually moves your credit score? So specifically how people's credit is calculated?
So the most important thing is to be credit on time. Credit on time is your due date is the 15th. You are making sure it's paid by the 15th.
Paid by the 15th.
Now we're in July. Let's pretend it's July 15th and you paid it on August 16th. That is what's called a 30-day.
Yeah.
That bad boy stays on your credit report for 7 years, and that can cost you anywhere between 50 to 100 points.
Whew.
And every one beyond that is more expensive. So there's 30, 60, 90, 120, 150, 180. There you go. And that's where we get into frequency and severity. How often is it happening? And severity is it just a 30? Is it a 60? Is it a 90? It just goes up.
Is it habitual behavior? How frequently are you missing payments?
Correct. Yeah. So that is going to be your biggest impact on your score no matter what.
Okay.
If you were running into a problem, again, talk to somebody. I bet you, this is what I love about Patelco or credit unions really is you skip a pay.
Yeah.
Don't let that hit your credit. If you can't afford to pay it, call us.
Yeah.
Your next biggest factor, we've kind of touched on this earlier, is that credit card. Now, I can't think of 20% off 15,000. So we're going to use 1,000 because that's the one I remember. If you have a limit of $1,000, you should not be spending more than $200 in a month. And I do mean accumulatively in a balance. You shouldn't carry that.
Yeah.
And if you want to be more careful about it, I say feel the burn. Every time you spend on that credit card, you are paying that card because Erika likes to spend money. And past Erika doesn't know it. And every time she gets to her statement, who spent all my money? It was mother. I had to stop that. So every time I spent money on my credit card, I was just paying it multiple times. So then I'd get to a week and be like, okay, the bill is so much smaller.
Yes. That's something that I have started doing in recent years, and it has helped me quite a bit. I think there's a misconception that you have to wait till the due date to actually pay your credit card. I pay my credit card off twice a week sometimes. If I have a big purchase and it's pending, as soon as it processes, I treat that like cash. I just go straight from my checking account, pay it off in full. It keeps me on top of my spending because, like you, I have also many times not checked my online banking for a while, and then I open it up and I'm like, wait a minute, but I was only going to Starbucks, and then you see how much that adds up, and it's easy to get lost track of. So yeah, no, I agree with that fully.
And as my soon-to-be father-in-law told me one time, he went through all the list of the pricing of the Hat, which is a sandwich shop. I was just having this conversation with somebody because I bought from Starbucks my chai and my breakfast sandwich, and I was like, back in my day, this cost me less than $8. So yeah, those little purchases add up, especially if you are just swiping happily.
Yeah. So you said the two big ones are payment history, how, you pay things on time and the timeliness, and then your utilization. So trying to stay below 20% of your overall available balance or credit limit that you have. There are a couple other smaller factors as well that impact your credit. Can you just quickly touch on what those are?
Yeah, I would say length of history is actually a third big one, especially if you're new to credit or you've had established credit. And the minutia of that is every time you open up a credit card, you are lowering your average length of credit.
Sure, yeah.
So I tell people credit is a race that starts with a date and a time. I'm 37, so I started when I was 18. Every time I've opened a credit card, that either fluctuates less time, or if I don't touch credit, it grows in time. So if you're opening things, you have to be cognizant of it, because you don't want to be somebody I had 37 credit cards and they're all older than 5 years. I'm like, I'm so sorry you're stuck with those forever. And now you have to go make a purchase every once in a while so they don't close. But the last two are like little things. Credit mix. What types of credit do you have? If we're talking about real specifics, like you want to get ready for a mortgage, you should have 3 items on your credit report. The bank term or the credit term is called a trade line. Anything credit. Auto loan, personal, credit card. It can be a combination of all 3, none of them, one of them. And then inquiries. Oh, so many people talk to me about that. So bank term is inquiry, but it's credit applications. As long as you apply less than 2 times a year, you're fine, because every 2 years it falls off your credit. Technically, it only impacts your credit for 1 year. You get your points back on the second year. Year 2, it's gone. So we're in 2026. If I applied for something in 2020, you can't see that. You can't see it in 22. You could probably see it in 24. If I apply for something today, it'll fall off. Okay, we're in July, August, September, October 2028. Not visible. So don't freak out about applying for credit.
People have to apply for credit if they want to get auto loans or home loans or whatever. That's just there to make sure people aren't, boom, 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 doing a bunch of hard pulls in a short period of time.
Don't open 15 credit cards at once.
Yes, exactly.
Slow and slow.
Slow and steady wins the race.
Exactly.
All right. One other thing I want to talk about here. People often will ask why their score looks different no matter where they check it. Can you talk very briefly about why people might have 3 very different scores when they are trying to pull their credit or look at their credit score from different places?
Absolutely. So one, you have 2 different scoring models. That's how you get your grade, right? They're similar but slightly different. It's FICO and Vantage. Then you have the 3 different bureaus. So scoring model, credit bureaus, you have TransUnion, Equifax, Experian. They have different ranges. Also, I'm checking on my phone. That's a live score. When you pull credit, typically in today's world, I'm pulling on whatever's reported. You said this earlier, and I think this is perfect. I pay my credit card twice a week sometimes. Some creditors don't report the day you're due. They might be a few days earlier.
see.
So you paying it earlier is helping you because now your utilization is reporting much lower.
Staying lower, yeah.
The other thing is there are people I know we report on the last day of the month. So, okay, we are July 7th. If you paid off a credit card today, but your credit card's not due till the 15th, I'm going to see your balance from June.
Right.
So there's a gap there. There are all these little things that are going to change, but realistically, I would not be worried about it unless we're talking about 50 to 20 points.
Yeah.
That is a big one. You're talking about high utilization, or you're talking missed payment, or there's other information that's on your credit report.
Yeah.
I love Credit Karma because it gamified things, but people have been gone, oh my God, my credit score moved. I need you to take a breath. We're going to be okay.
Yes.
It's 2 points.
Yeah.
It's not killing you.
Yeah. 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 The way I always talk about it when I like go to colleges and teach on this is that it's like you have the 3 main credit bureaus. Think of it as like 3 different chefs who are each making the same dish. They're all following the same recipe. It's not going to be 3 identical dishes. There are going to be slight variances between the 3 of them because there's 3 autonomous like entities that are creating this. It's the same data, the same stuff. It's just because it's 3 different institutions that are making the score, there's going to be slight variance.
And to add the best complication to it, one lender may not report to all 3 bureaus.
Yep.
That is the number one thing I tell people is you might see something on a credit bureau and it's not on the other 2. They're not reporting to everything. So don't panic.
Yeah.
Just figure out what that is, what can we do, and kind of like move forward.
Beautiful, beautiful. I would like to do some real quick rapid fired like Mythbusters or FAQs or things that I hear people commonly ask, maybe some misconceptions they think they might have about how credit works now that we've kind of established what it is and how it's calculated and all that good stuff. So the first thing I want to talk about, we talked about how keeping your utilization at 20% or less is kind of the sweet spot for that metric of your credit score. Is it true or false that you need to carry some kind of balance on your credit card in order to build your credit?
No, don't throw away your money.
Thank you.
Stop giving us money. I know where this myth comes from. This is pre-digital era.
Right.
You got to think about like what the 50s and the 60s were when OG FICO was like made.
Yeah.
Everything was mailed. That's why they told you to do that. You don't need to do that at all. If you have a 0 balance, that's reporting in your favor because guess what? That's on-time payment history. And you have a perfect credit score at that point with a 0 balance. Nobody's going to know if you used it or not as long as it's reporting on paid. Now, I do want to say the caveat, don't open credit that you're not going to use.
Oh, no.
No, but the point is you have the ability of having something reporting in your favor. Keep it that way.
Yeah.
You don't owe anyone money. That is literally taking money and just setting it on fire.
Yeah,
Why do that?
exactly.
Why do
Exactly.
that?
As long as you're actively using the card, you can keep the balance paid off and you'll be
Correct.
just fine. All right. So we talked about one of the impacts of your credit score. It's a small one, but one of them is doing applications and pulls on your credit. True or false, checking your credit does do one of those pulls and can negatively impact your credit score.
When you say checking your credit, I want to clarify that I'm looking at my app.
Yes.
That's called a soft
pull.
Very technical term. If you actually look on your credit report, it'll show all the soft pulls. And if you're using things like Credit Karma, Experian, Trend, you'll see them like dozens of times.
Yeah.
It doesn't impact your score. The reason why you actually want that, and from your lenders, is that's how your lenders, your banks, because Patelco does this, they offer you pre-approvals that way.
Yeah.
That's exactly why you want them.
Yeah.
So that won't impact your score. Also, the other thing is check my rate. That's a soft pull. As long as you don't go past that screen, that quote is getting you the idea, oh, this is what I could do if I do apply. So
Can you talk about what Check My Rate is?
yeah, absolutely. So with personal loans, auto loans, you can go to our website. Like if you go to the rates, it's the percentage sign, you click on the loan type, there's a nice big red button underneath the rate sheet and some information. It is all secure, don't freak out, because it will ask for your social, because it's running your information on a soft pull. It'll pull whatever last report was generated and it will either say, hey, you could get it for this. Now that's not an approval. It's not a denial either.
Right.
You don't get anything. Just means we have to submit an application.
Beautiful. All right. Another one I have. True or false, closing a credit card that you're not using anymore will improve your score because we're taking it off, we're not using it. Closing credit cards helps your score.
It depends.
Okay.
So if you have a credit card that's older than 5 years, don't do it.
Yeah.
You're stuck with that card. I hate to say it. This is where, I mean, you and I have spoken about this privately, but there's so many stores that want you to get their credit cards, and their annual percentage rate are ridiculous.
Yeah.
You don't need a credit card for that one store.
Right.
Because guess what? What happens when that store goes out of business? Your credit history.
It's gone.
It's gone.
Mm-hmm.
That APR is probably higher. You can't be a smart consumer in the sense that you're stuck shopping at a store no matter what.
Right.
And store branded cards typically don't have like a Visa logo where you can take it out. No, some do, but you're not getting the same benefit out of it. Now, I'll say this. Let's say you had a credit card for less than 2 years. You're not using it. It's got a low limit.
Yeah.
You can cut ties with it at
Maybe
that
an annual fee as well.
Oh, God, yeah.
Yeah.
If you're going to get a credit card that has an annual fee, please make sure you're getting all the benefits.
Make sure it's worth it.
Yeah,
Yes.
make sure it's worth it. I mean, we don't think of Costco as an annual fee, but if you're paying for that membership, that's a fee, right? So, yeah, I would say it depends. Don't go willy-nilly just closing things. Talk to someone like me. Let me look at your credit report before you go crazy, because I have seen bad things happen. I had somebody who they were getting ready for a mortgage, and I was like, look at me in the eyes. You are not touching your credit. You're not applying for anything. You're not opening anything. You're not closing. I need you to repeat it back to me. They said yes. The next week later, I saw her crying, and I was like, which one did we do? Because I know we said it back to me. We understood each other. I did the crazy eyes and looked into my soul. And she's like, well, I went to this and this isn't Patelco, mind you. This is my old bank. I went to another bank, another location, and they offered me something. And I was like,
no.
She lost her mortgage because of that.
Oh, no.
And that's why I said, be careful when it comes to credit. You don't want to risk things, especially when you're dealing something with a mortgage.
Yeah.
And the mortgage does not want to compete with anything or anyone.
No, one small decision can have a huge impact. All right.
Yes.
The last one we have here, paying a collection or a charge-off removes it from your credit report. True or false?
Sometimes.
Okay.
So, technically, if you pay off a collection, most of the time it should fall off. Now, collection just means that you owe somebody money.
Yeah.
Sometimes that can stay longer. Sometimes you can request what's called a pay to delete. That's when you talk to the lender and say, hey, can you delete this off my credit report?
Yeah.
They're not required to do it. You could just negotiate and hope to God it's going to work for you.
Right.
A charge-off's a lot harder. So a charge-off is where payment has not been received for 180 days or 6 months. And remember what we talked about late payments?
Yeah.
Yeah. So those are 7 years. Those charge-offs are 7 years. So let's say we're July 2026. If I'm looking at a credit report and I see charge-offs from July 2024, that's 2 years of every month it says charge-off.
Yeah.
That is an anchor on your score, and it's just dragging you down.
Yeah.
If you pay it off, your score is going to bump up. Unfortunately, that history is there.
It's still there.
It's still there. You have to wait. So I usually tell people, if we're picking something, either set up a payment arrangement where you're paying it so they can stop the negative reporting, or put a bunch of money down and then have a smaller monthly payment. Negotiating for less than the total balance is like the lesser of two evils.
Yeah.
But ignoring it is the worst.
It's the worst.
It is the worst because that lender can sell it to somebody else. And depending on the amount, you can get sued for it.
Yeah.
You just don't want to deal with any of that.
No, you certainly don't. All right. I want to talk about some other things that I'm hearing a lot in the credit scope, the credit landscape these days, and that is the increase of things like rent and stuff like that being reported on people's credit, or maybe not even being reported on people's credit, but being used to determine credit worthiness. I know Experian Boost is something that we hear a lot about. I, for the very longest time, did not really understand what Experian Boost was, because the way it was advertised was like, you sign up and your credit goes up. And I didn't really understand the fine print. So are these, kind of alternative tools, things that you would recommend? Is it case by case? Can you kind of explain what that stuff is?
So The very technical term is a thin credit report. Just means you don't have a lot of history.
Mhm.
That's perfect for those people, or people who don't have the wondrous family that puts you as an authorized user and
Right.
doesn't let you get access to that credit
Yeah.
card, and they're keeping that credit card immaculate. That could be helpful. Here is the downside of it, and it's not really downside. I just need you to think of this in context. You having a credit card in your name where you are legally responsible for it is always going to trump everything.
Sure.
Being an authorized user is going to help you, but when we talk about the Experian boost, that only works if the lender is using Experian to pull credit, because
Yeah.
not every lender pulls with all of the
Mhm.
reports, because that's expensive. 2, depending on who you're talking to, and if people don't understand this, when you apply for credit, you're doing that with a banker. Somebody at the back office of the lender that you're working with, the department's called underwriting. They make the decision on it.
Mhm.
The problem with those boosts, or even I see it with Klarna, Affirm, any of those,
Yeah.
it doesn't look like a credit card. It just says that you're paying for a bill.
I see.
So there's like a little bit of weird information.
It's
We're
not
playing-
reported the same way.
Exactly.
Yeah.
It's showing for payment history. That's great for that. But your utilization looks messy.
Yeah.
You don't know what that really means. And again, we are getting into trended data. So that's probably going to change in the next couple of years.
Yeah,
So
yeah. And Experian Boost just to work. Experian Boost is just essentially you linking your like
accounts.
rent payments and things like that,
Correct.
so that
And it has to be like a big
Yeah.
apartment that's doing that. I think California put something in like last year where every renter has to have their credit reported
Mhm.
to help with on-time payment history. But again, that's just on-time payment history. When
Yeah.
you're looking at a credit report, it is a whole thing. It's
Mhm.
your on-time payment history, it's your utilization. And because it looks like a line of credit, but it doesn't have a limit,
Yeah.
that gets wonky. So I think the easier thing is use that when you're not maybe ready to have a credit card because you don't have inconsistent income. That's great for boosting your score. Once you get consistent income, I would say try for a regular credit card. If
Okay.
that's a no, then we're going the secure credit card route.
Yeah.
That's where you have to put your own money down. That's the limit of the card, so that gives you spending power. But whatever you spend on it, you still got to pay it back.
Right. Yeah.
And the thing is, I only want you to have that credit card for a year and a half.
Just to get back to where you can be rebuilt and get an unsecured card.
Correct, or just to establish your
Yeah,
credit history
yeah.
for some people. And this is more so people that are coming into the country, right?
Yeah.
I'm not saying an 18-year-old needs this.
Right.
This is for somebody new to the country or somebody who's on the rebuild. The reason you want that shorter history is I want you to get a regular credit card. Because guess what's going to happen? We're going to close your credit card.
Mhm.
Your score is going to go down
Yeah.
temporarily.
Yes.
Don't panic. It's the same thing when you pay off an auto loan or personal loan.
Yeah.
Don't look at your score. It's going to go like this,
Yeah,
and it's
yeah.
going to go like this. You're fine. You got to look at like the average of everything. And then again, like I said, we have other products. I love our Score Up Credit Builder. Now, I do like to tell people, don't listen to the word loan. I want you to think forced savings account.
Yeah.
I'm forcing you to save a certain amount of money. And once you're done paying it, I'm going to give it back to you. And guess what? Patelco is going to put to all 3 credit bureaus, Experian, Equifax, TransUnion, you've paid off a loan. It's going to say secure loan, but
Yeah.
still on-time payment
It's
history.
on-time payment history. Yeah.
Exactly. And you get an auto payment. You can't be late.
Yeah.
Beautiful. I love our instant backup,
Mhm.
little $500 limit,
Yeah.
just in case your checking account goes overdrawn.
Mm-hmm.
Also, I love that like we email people, hey, you used it.
Yeah. Yeah. Yeah.
And I was like,
It keeps it front of mind.
exactly.
Yeah.
You can't forget, right? And then you just like paid off or whatever. But those little things, anything reporting in your name, top tier. That's the most important thing you could ever want for yourself. Those other satellite things could be helpful, but I'm going to also
Tertiary.
say, tell me more about your specific situation before we jump into it, because I bet you Patelco probably has something better.
Yeah.
And the reason I say that is, again, do you want to get involved in a relationship with an institution that you
Yeah.
credit experience different? That is a credit bureau.
Yeah. Yeah.
But like I said, it's just not the same thing as having something in your name. If you're
Right,
just trying
right.
to get your on-time payment history, you're at an apartment, you have a utility, that's great. But at the end of the day, that credit card's going to make or break you.
Yeah. Let me ask one
Yeah,
quick
go
question about this. This is actually something I don't know the answer to. I've been meaning to Google it for years and I keep forgetting. Authorized users on credit cards. So true or false, does that help your score?
It does to an extent, but it depends.
Okay.
So I'll give you an example. I have a store credit card.
Okay.
And I added my mom as an authorized user because I was trying to get my sister a prom dress. But I worked at retail. There was no way I was going to get to a store.
Mm-hmm.
They actually put her name on the credit report and she was legally responsible. So technically that was more like a joint.
A joint, yeah.
Even though they called it an authorized user.
Yeah.
Now there's the more true version of an authorized user where, let's say I'm adding you to my credit card. You're not legally responsible for what you spend.
Right.
That's all on me.
Yeah.
And this is the tricky thing. Some lenders will report and some others don't. So my question for you is you got to ask your lender before you jump on it.
What
Correct.
they're reporting. So if I have like, let's say a 16-year-old and I put them as an authorized user, I know you can't really officially start like building credit until you're 18, but what happens in those 2 years when they're 16 to 18 using a credit card that they're authorized on?
This is the thing that I love telling parents
Oh
about.
boy.
If your lender lets you do younger and it's reporting, do that.
Do it.
Just don't let them have access to that credit card. They don't even need to know about the credit card.
Got you. Oh, interesting.
You spend it on make it your like gas or grocery bill or something that you know you're paying it off. You're not keeping any balance. By the time they're at 18, it's like somebody put them
It's
on
like
their
giving
shoulder.
them a little
It's
jump start.
boost.
Yeah.
Exactly, because now you have history behind them.
Beautiful.
Now, the thing is, you can't legally sign anything at 18. That's why you're allowed to be an authorized user.
I got you. Okay.
You're not
that makes sense.
responsible for it, but that history is
No, I
it's
love
the
that
most important
idea
thing.
about just having a credit card that your teenager is on, that they're not even, you're not, they have no really viability for that. You're the one, buying, paying it off. But if you have that good behavior, it's just mirroring to them to set them up on a good foot when they get started.
Correct. And then I'm going to flip the script on it.
Okay.
If you're an authorized user and somebody's not paying on that card, get your name off
Get
of
your
it.
name off
It's
of it.
not helping
Okay.
you. So the flip is true. So
Yeah.
if you're going to do that, just make sure you're doing that with somebody that's going to help you
For
out.
sure,
That's
for
the
sure.
most important thing.
Okay. So I would like to wrap this up. And you actually talked a lot about a lot of our products and services, our Score Up, our secured credit card. We do have quite a few products and services that are out there to help individuals who are looking to rebuild their credit or kind of get back on the right credit path. If you can talk a little bit about how people can get in contact with you or the other ECFSs, or what the path would look like for somebody who is listening to this and says, this sounds great, I want to talk to somebody, how do I get started?
Stop at your local branch and say, I want to talk to a financial coach or a CFS or an ECFS. CFS, Certified Financial Specialist, ECFS, Enterprise Certified Financial Specialist. See, this is why I say financial coach. Too many words, too many letters.
Word salad.
Exactly. I want to talk to somebody and I want to talk to them about budgeting, saving, all of the above. They'll put in a little ticket, and I do mean that. And then we get a nice little email saying, hey, somebody wants to talk to you. Please make sure we have your correct contact information because I will be calling you, I will be emailing you, and I'll be leaving you a voicemail. Please have your
You
voicemail
asked for
set
this.
up. Yes, please. I'm trying to get in contact with you. And no, it's not about your auto insurance or your car's extended warranty. Now, I will say for those of us who do travel, like myself, Danielle, Nick, and Jerry, we have a whole region. So I do need everyone to be like, okay, if you want to meet in person, just know we are traveling. We have our branches that we have to hit. Just be flexible with us. But a lot of us do coaching on the phone and through late teams.
Yeah.
I actually have a bunch of people that I met while they were out of state, like California, because I was in virtual branch for so long. And I still coach them and just get on a Teams call. Hey, how you doing?
All right.
So we will get in contact with
You can do it from the comfort of your home. I love that.
Be comfortable.
All right. My last question for you, Erika, is a question that I end every podcast episode with. And that is, what is your golden nugget of this recording? So what is your one overall tidbit, piece of advice, words of wisdom that you want to share as like your underline on this episode?
Okay, I can't pick just one thing. I'm
Okay.
not a one thing. I'm a three thing kind of gal.
That's not a three.
Don't be stressita. I tell people that all the time.
Okay.
If you're stressed about your finances, you're not thinking about your finances.
Yeah.
Just start small. Slow and low is like the number one thing. Just do something simple.
Yeah.
Talk to somebody.
Yeah.
Listen to this podcast. Watch a YouTube video.
Beautiful.
Come talk to Patelco. One of those things. 2, everything in credit is fixable. I do promise you that. It takes hard work, especially when we're talking about like large charge-offs. That just takes time.
Yeah.
And you gotta wait for it to fall off. But guess what? Some things are like quick fixes, and you're just like, oh. And this one's not necessarily about finance, but it's like more of a mantra.
Okay.
And I saw this from Philip DeFranco. You're not your thoughts, your feelings, your emotions, or your actions.
I love
Basically, that whatever is going on, don't let it define you.
Yeah.
I kind of said this earlier. I try not to moralize credit because, unfortunately, a lot of people are going to use that and use their moral superiority. I have a 750 score. But, like, that doesn't mean anything because all it takes is one act of anything and it can all come tumbling down. You lose a job. God forbid you have a medical bill. Like, anything could happen. Your credit, identity theft. And just so many things. So don't freak out about that. Just let's try to get through it.
Yeah.
And know that it's going to be okay. It's not forever and we'll get through it together.
I love that. I like that. I find this a lot when I'm asking this question. A lot of these tidbits people give can apply to like any area in their life, not just money. And I really like the idea of just starting small with anything. If you feel like you have any kind of mountain to climb and you look at the whole mountain, it's going to be much more daunting than just each individual step. And that is how we ultimately get to the top of that mountain. So I appreciate that word of wisdom. Erika, thank you so much for joining me. I have learned quite a bit from you as well. I've had a nice time talking to you, so I appreciate you stopping by today.
Oh, thanks for having me.
Of course. And thank you all for listening. That is going to do it for today on Small Talks for Big Change, where we simplify financial topics to help with your financial wellness. We will see you next time. Patelco Credit Union is insured by NCUA. Equal housing opportunity.